Okay, guys, I have an hourly chart up here. We're going to start off on the daily. So let's zoom out real quick. Now, originally, when I posted it earlier in the morning, I had a trend line here because there is this bias down, right? Which I also marked as the intermediate term bias, which is basically who's in control over the last couple of weeks as neutral bearish. And right, the short term is bullish, right? And the big picture, right, when we got into this major zone, that's when you should actually get more aggressive, although it never will feel correct to do so. You could have waited for the pause day that we talked about. It was very hard psychologically to maybe step in on this first test, right? But after the pause day, right? Because if you're fading this on the way down and you get stopped out a few times or whatever, you lose conviction by the end of the day. Plus, there's always this idea that when you have sustained momentum, unless you get action reaction, you get a day like this, 90% of the time in the ES, according to a study by Tom Alexander, they close in the last few hours of the day. So you can keep that in mind on a downtrend as well. But once this, got into here, right? This is when your larger time frame bias, which was bearish, becomes at least neutral, where you're thinking, okay, now this thing can potentially reverse. You had the pause confirmation day here, and then we had the leg up. So the short term has clearly been bullish, which is great. We had this hammer candle yesterday for taking out that at least was going to say we had action reaction. We had a zero line reject here, a little. Well, I don't know if that's a zero line reject. It could be a sham move, but we don't really talk about that. But anyway, we also at the same time we're recognizing that even though this short term has been bullish, and even though the big picture is bullish, and we went out of it, right? The big picture and the short term aren't really what create prime alignment. It's the intermediate term and big picture that have to be aligned, or the short term and the intermediate term is what I've observed. So this is a day where I wasn't thinking, oh my God, it had to be bullish. You had to buy breakouts. This was a day where it was almost like, yeah, I wasn't coming in with a very strong bias on today's time frame because understanding that we did have this trend line, intermediate term, neutral bearish bias with this trend line resistance. We also had right above it, you could see here, as it was coming up into these moving averages, which I was noticing but not giving too much credence to because we traded through them a lot, but they stood here on the cross, and so on and so on. So there was that, but also this high volume node is pretty much the same size as this big one, except that this one sticks out a little bit more, and that's why the indicator draws the VPOC up here. But let's not kid ourselves, there's also one here, right? We just came up into this, so it's like, why couldn't this be problematic, right? So that was the market context coming into the day, where your larger time frame bias is uncertain. You're looking at these things, you're saying, okay, maybe there'll be a lot of, because there's biases on both sides, we'll have non-directionality and it could be two-sided. And that's pretty much, this is the start of the new day. This is what it was. If you really have strong conviction, you can be long and short on these days. You don't have to be. Like, for example, I'm not getting out of my runner here because this structure is building some structure and we might get a surprise launch up here. Now, someone might say, well, if you think that's going to happen, why can't you just buy there? Well, there's a huge amount of risk to do that. You can't buy there. You can't buy at the high of the day. If you bought at the high of the day here, that's a mistake. Even if it broke out and you're a winner and you put your stop below here, like some scalpers do, or below here, you're still a loser because this is not going to work out. This is not an idea that's going to work out over a large number of times. This on first test was very scary, right? This was the first zone we had, right? Because it came back into this, but it's coming off a stronger zone up here than this little one here. But this little one here was a launching point here, and it did launch on a pullback here, so it was creating problems, right? The old me maybe would have gave this in or got in, like, no, I don't care if this turns here, right? Came down here. This looked kind of scary, even though action reaction, but I just let it pass. I think it's because the ES I broke down and there's just say, hey, I'm going to let this one go. But it would have been correct process if you were prepared to buy there, even though it was very scary. Let's go on the 5 minute. You can see what it looked like in real time. Right. So one of the thoughts I had to take this and give a signal was, even though there is momentum and it's only the second leg down and we're not really at a max range and this zone is stronger than that zone, there's a potential, just because we have been short-term bullish, for this to actually work out. But the idea is that there's a very small risk here because the invalidation point is simply a few ticks below this zone. You might say, well, man, why didn't you make this zone this wide? I could have, it just, I've been doing this so long, I kind of just can see touch points, touch, little overshoot, little touch. That's where I made it, and that's what it worked. And that was drawn prior, guys. These are all based on real market structure. So if you have a sideways call and you have a wide double bottom, this zone can help you stay disciplined with your stop. You have a few ticks below this swing. So you could have got in there saying, hey, if I lose here, I'm losing 200 ticks about, okay? So if 1% of our entry price is about 500 and something, right? We're below 0.5%. It's a very small risk to take a chance to get a reward up to a VWAP or even to the high of the day, right? For your main target up here. But right, with an abundance mindset, you can't get them all right. You could, on confirmation, you have a strong action reaction here, but at the same time, this thing could have just bounced around a little bit. This is not, there was nothing saying this had to be the place. I mean, you could see a pattern here of a V sideways dip go, but this is not on a daily chart or anything, guys. This is just on a 5-minute chart, right? But it was the low extreme of the day and it held, right? But this was a double bottom and this one was given up to here, stopped out, taken again, and now I have a runner in. So it was easier to take this one, even though this was an island reversal pattern. Remember, on the daily, the short term has been bullish. So it's not as if there wasn't a possibility here, right? It's just that this day, based on how bullish it's been and what it crashed into and the momentum lacking behind it, we can go on the daily and see there was not momentum on the bullish side. There are traders that can really trade sideways days and really shift, bam, 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 bam. And I've seen it. So it's, if you have the conviction for something like a day like today. But right, we had this hammer candle that pushed us back up here, but it's not like we closed above here. And we talked about all this overhead resistance and we smashed up in here, right? So there was not momentum coming in. You're almost like an inverse zero line reject or whatever. At least that's what played out the day before, right? When it came up, then we got, so we could expect that today was that. Now, we did get this action reaction, so I am going to take a bet now to hold a runner, right? I don't have the guts to step in and go all out and then short because, I am reminding myself that even though I'm taking this on a day-by-day basis, I do want to go with this major zone turning point because there's drama on the way up here, but it eventually gets up to this trend line. It eventually gets up here. So, try to stack some runners in and, you don't have to go all in, all out. You could just make it easier on yourself and try to stack runners at lower levels. Right. Some people, like I was trained prior to this, before I even knew what a Bitcoin was, to go all out, and that's kind of the rules of the game. But that's neither here nor there. I can hold a runner anytime I want now. So, but there are some advantages on if you had strong conviction on a doji day that it's going to be sideways, you can go long and short, long, short, long, short, and you can make multiple R's, huge R's. That you might say, wow, was this a trend day? No, this is a guy who had the psychology to go sideways, like hardcore, like day, like boom, boom. Even today, like the intraday bias is now up, and if you closed here, the bulls did have the win on the day. We're not out of the water yet by any means, but they did have the bias. But the drama on the intraday time frame, based on that analysis I gave, where we had this trend line here, and there was a lot of weights on either side. So it's like maybe you had one time frame bias on your side, but you had the resistance on the bear side, right? But not so strongly that you couldn't go long. And that's why I put the neutral in front of the bearish and bullish to qualify those. They're not pure right now. So not the easiest to trade in the middle of this giant multi-month flag. Just remember that when you break a flag, right? Now, granted, we had multiple legs, so we had major exhaustion, but now the potential energy of a trend is going to get, the longer this goes in time, the bigger the trend that can break out of this. And this is a bull flag. So even if it goes down to lower levels, it's still going to be based on a bullish pattern even when, let's just say it came down to this double bottom where this green zone was again, or even lower, that's still a buy. Even if it overshot here, that's still a buy. Right? Because you'd have this high volume node now coming into play. it's very counterintuitive. So you can always wait for that day. But sometimes when Bitcoin just takes off, it can really take off, and that's what creates FOMO. I mean, this day, so you knew the next day the bulls were going in, right? It's harder to go in when it's quiet, but that's nice because then you could still got most of the move now. So that was Bitcoin. I think Ethereum was similar, but I'm not dual trading them right now. I just don't like how Ethereum is moving lately. It just looks ugly. So I'm not trading it. Sometimes I go half, I go on both on the same move. Because sometimes Ethereum has a higher beta and sometimes Bitcoin does, and they usually move in pairs, but they don't always move in pairs. Like sometimes one will overshoot a little bit, stop you out, and then they'll get in, and then they'll go. So they're not one for one, but when they're in sync, man, they're in sync. Like yesterday on the CPI, whatever that number was at 8:30, Bitcoin and Ethereum and ES were all blah blah blah, and I just wasn't in a conviction state to put on risk. I just didn't want the stress in my cortisol levels. I needed a break, so I just said, "Hey, this is responsive buying." So there's a responsive buying and there's initiative buying, right? Responsive buying is when buyers step in because it's gone too fast too soon, and it's not really going to be a trend day based on a higher context, but it has so much momentum that it's moved so soon. You could just take a percentage of the max range of the last 20 days, and if it's anywhere near 60 to 80% of that within the last hour back tested, you'll see this thing can move. So but you have to be really ready to go, because as soon as I put on risk, I have a higher stress level. So I just, I might even do a couple days 100% blue screen break over this weekend. I think I just need a blue screen break, even though I wear blue screen glasses, because I'm always on here. So, but then it's like, so I know I've matured as a trader because I'm not FOMOing that I missed a huge move. I mean, that signal I gave yesterday for both the ES and Bitcoin Ethereum was like a huge win. I mean, that could have been more than a 10-hour day easily. I mean, I think it moved like hundreds. I mean, it moved a lot. It's very volatile, right? September's really increasing the ATR here. You can see that's the trend, and we like that as traders. Look at this in the middle of August, really dead. You see the whole summer just kind of trending down, and then now we're coming back up. Let's see, Bitcoin's okay. Bitcoin's still, but that's typical, right? That's typical for based on the past history of September, because it's usually the month where it's pre-election and there's a lot of something, and then the Christmas tree rally happens at the end, because it really doesn't matter who's going to get elected because they work for the same guys. I have proof of that, but it's all good. It's already good. I mean, it's whether one's supposed to be the enemy of it, the other one isn't, but then the enemy of it, of the crypto, she's taking cryptocurrency donations. I mean, we live in an absolute clown world. So, not to get too off track, but yeah, you could see how just the S&P is just that's but Bitcoin, Ethereum, just based on the range analysis, not. Remember, we're at support here. Last time we were here, we had volatility expansion. So if we come into this zone in October, this could act as a nice support. So let's go to ES now. I was more bullish on, even though this is no volatility. I mean, it is nice, but it's just not moving like the ES does, even though these percentages really don't show it because those contracts are 50 points each, $50 each per point. And then you can have, to do a quad exit, you need 4 contracts. So it's leverage times 4, but it's still within a risk model that makes sense. You could always do 2 and do a 2 for 1, or 1 even, or the micro, actually. The micros, each point is $5, so you can have a test account. You can open an account for $1,000 or something. So, not that you can't be a big trader on the micro. I don't know why you would, but I know some traders like that better than the ES, so they do big size there. But, what was I going to say about the ES? Yeah, I'm not as bullish on it, really, because, I mean, this is coming off a major zone, and despite it, it's been really bullish because, there's this V pattern, the sideways, and there's this dip, right? So I guess I guess that's in line with it, right? It's coming to this shoulder here. I just feel like it's so overdone that I was open to the possibility of this even, potentially going lower. It moved a lot more than 100% of this range, but this is the V sideways dip principle that Kobe talks about. Maybe he can talk about whether this dip was abnormal or not. But you could see here, just on the day that it reversed, right? We had a huge oversold signal on hook from extremes on the CCI pushing minus 200. And if we go on a lower time frame, we can use two new indicators that you will not get for Bitcoin and Ethereum or single stocks. It's the index underneath the hood. Gives us one, and if you read it right, it can really help you. But if you read it wrong and you kind of read it linearly, you will get destroyed. So it's actually better not to use it if you don't know how to read it right. But I'm going to go to that in a second. I'm just trying to figure. Oh yeah, so what was the context today? Yeah, there was an ES trade that I took that actually bounced up and was profitable. It wasn't a huge, it was like 6 points or something. But then I said on the retest, I'm not taking it. I forgot why. I told people not to take it. I'd have to go to the channel and see, but that's okay. I think there was, let's explore why. Let's see someone. Hey, Tom. Yeah, if you guys got questions, you can type them in the channel or write in the channel, hey, I have a question, and then, or just unmute yourself or whatever. But yeah, I can go. Let me just look real quick here. Oh yeah, okay, that's why. This was a really crazy context, right? This was September 12th. I'm just making sure I'm on the right day. I forgot this was even today. This is why you got to write down your trades. You can't just look at your P&L. When I get into just the P&L thing, which I don't even look at until the end of the month now, because I used to look at it every day. Like I used to look at the bot and hit refresh and look at my P&L. That's not how you do it. And then look at my portfolio and say, okay, how much am I? Okay, is it bigger on the API bot or not? Can't do that. I'm doing way better just by following correct process. As a side note, but just to show you how much you can just forget this. I said, yeah, I got 25% off. And then I said, going to sideline, is there maybe trapped longs that could take this lower since non-responsive to bullish tick and AD line? So if I go back and what was I doing? I said, price making drive down off open and AD line and tick bullish. That was my signal to go long, right? Along with the fact that it had good trade location and that it was most likely going to be sideways. We'll look at the higher time frame. We did get that V sideways dip go, so you were going with the bigger picture pattern, but um, the way that it reacted off that zone, if you look at it, let's go to it on an hourly. This was it right here. So, it had this little tail here. It kind of pulled back. There was this big move out of it. So you could say, okay, you put a fib ratio here. You're going for a continuation. But what helped me get it, because psychologically it was hard for me to go in on this. I probably wouldn't have even went long here if this was Bitcoin. But what got me in is, I don't know if you guys can see it, but on the AD line and the tick, the 80 line was at 950, stocks up on the day as price was going down for a while. Price was going down for like 8 minutes, and the 80 line was still at 950, and the NYC tick, which is like the moment to moment heartbeat, was at 453. Let me put that image up in the channel real quick. I'll go here, and I'll go share, and I'll go here. Okay. So the signal was actually before this. This was after, you could see the post before it, but you could see what I posted this. This was like maybe a minute or two after, but to show what I was seeing, right? It was actually a little bit higher than 950, but as this was going down in the first 8 minutes, it was all red here, and I'm like, wow, this thing is like 1,000. You know what I mean? Like, good. That's helping me go long. I was already thinking about going long. This is helping me anyway. There was a bigger picture pattern, V sideways dip go. This is at the low of the day. There's some edge there, but the ES, I feel like it just needs to be cool off. I don't know. It just doesn't feel right, but this helped. And then you can see, like, right, this just couldn't break. There was constant buying pressure from 453 up to close to 1,000. I mean, that's noticeable as we're going counter against it. You know what I mean? So that helped. But once we got up there at half off of the VWAP, and then as I was observing price, it started to struggle back and forth. And I said, going to sideline now is maybe trapped. So then I took the other side. I said, okay, well, now that we got up there and didn't get the reaction that we wanted, Possibly now I'm going to sideline. Is there maybe trap longs that could take this lower since non-responsive to bullish tick and 80 line, right? And you have to switch the context. I talk about that trap trader setup. So I always think in social market terms. I'm thinking, okay, I was one of those traders that saw the tick and 80 line against the bears and I went long. Fine. And now I didn't really like what I got. I just quadded it because I would have took a loss if I had like, oh, I have to be so mechanical. I'm really watching this real time too because I can read momentum as well. But at the same time, I'm thinking, okay, well, there's so many guys long on the day and they're not getting that responsive. Now this thing could get trapped them and now we could get a bigger move the other way. And that usually happens. This wasn't a setup. This was like I gotta like not go long again. The setup for that would be if you're um, going against the larger time frame bias and it's really extreme the other way, but then it's not responsive after a couple of tries, it's going to produce trap traders really big. So that's what we got. But at the same time, we're not really going against the larger time frame bias because we already established the bigger picture patterns of V sideways dip go. That's why this was hard for me to go long again, right? Because that was the zone I was. That's for Bitcoin. Where's the ES one? Let's go to the ES real quick, right? That's why I couldn't, even though this was the right move to go long on an extreme or whatever, because of the V sideways dip go on the daily, and also this is a smaller fractal of V sideways dip go on the 15. But it's because that trap trader setup was going against it. But remember, we weren't really going against the larger time frame bias. We were kind of going with it at that point. So it was a little tricky. So I just stayed out of it, but it did actually produce a good move, right? So you can't get them all. But Bitcoin was an easier setup for me because this was just pure structure. It was just sideways. The bias to me makes more sense. We're basically still want to go off the rotation, off the major zone. But now that we went to the middle of the bull flag where the HVN and all that other junk is, it's probably going to just have a little chop. So we got to switch our bias on the intraday to neutral, which is hard to do, while also keeping a multiple time frame perspective of this larger time frame idea. So I'd rather go with it, even though this would have been a fine short. You can see it really, right? And usually when it reverses that much, I step aside. But because of rotating off the major zone, I had to think top down and just say, okay, action, reaction, not really going to be a trend day. Also, I checked the ATR at that moment in time, and it was below average. So it's not like there was a super amount of volume. And we need, volume doesn't always correlate with the trend day, but I like to see it. So it's like, okay, well, this will probably just get exhausted. And that's what it did. That's why I even took it again here. So it's like double bottom, but you have to be kind of active because, you might say, well, why, if you took off here, you shouldn't have moved your stop to break even because you just had to get in again. Like, true. Like if I had to leave, that would have been tough because the bot auto does it in. And then I would manually change it. But the idea is I'm watching this because I thought it would actually go back down just because it was too close to it and it didn't have that space. And then it came down and then we got it again. But also just being open to the fact that, okay, this could just reverse and I'm wrong. But then the only thing I think about is like, wow, I have such a small risk here. This is a great controlled risk. That's so small. That's what I focus on, actually. Look how a lot of these positive guys, you have to focus on what you want, but actually what I want is to be a good trader. So the actual tactics is actually focus on the risk, actually, which is actually counterintuitive because these guys are like, hey, you can't think negative. Yeah, I am right now. I'm thinking about my small loss that I could have here. That's the only thing I can really control on this given trade, but I would take this over a large sample size, also thinking of probabilities long term, right? So that was that. So not, not super exciting, but still like this was the real day, right? That's when that responsive buy signal came in, and that would have been amazing, right? And you never fade a V, so we're learning a principle there. Nice. I was just glad I saw the responsive buying. And I said, okay, I can't trade. I just didn't want to trade Thursday, so I just had to be positive about it. Otherwise, you might have saw me buy here, short up here. I don't know, I'm just being an example of when you come back and you can revenge trade. I'm just relaxed. You don't have to do that now. So now let's just look out for just from a more larger time frame, right? So we talked about the 30-week cycle decode. We said Monday 9th would possibly be a day, right? It actually was that was the 9th that we had a big move off there. Just happened to be, these things don't always have to work out. but this time it did. And at the same time I'm seeing this, right, there are some signals to also be cautious because, this is not like we're not clearing any candlestick yet. We're still chopping around here. We still have the red bearish over the blue stochastic, right, which means that the momentum is not bullish yet. It's actually showing a bearish sign. But that could, when it changes, it changes. The Bollinger Band, however, is in that oversold condition, and it does have a similar time factor to the last two times it established larger trends earlier in 2023. Same clone, and now, so it's everything sinking nice in this chart, but until there's real conviction and a real substantial price discovery out of here, then I take it day by day as a trader to establish these positions because anything can happen. We'll zoom out. Just to make sure you guys can see my Bitcoin spot monthly chart. Someone could type it in. I just want to make sure because I've been.
No, we can't see it.
Okay, so let me share it. Okay, is that good?
Yeah.
Okay. So I probably should have went back to the weekly because you didn't see that. So let me do that. Right, there's the 9th. That's when we actually had a nice strong move out of this. It is in alignment with this time cycle that's worked in the past, so why not? But at the same time, this momentum, right, it's still bearish. It's still not confirming this is sustainable. Take this with a grain of salt. I only like this once a trend's established, right? For investors, maybe hold a longer position because we are still in the bottom range where things usually launch from. But it's still not showing the bullish sustained momentum that we've had. Like, for example, when this blue crossed over here, that's when we had our trend up here. At the same time, this Bollinger Band is cloned of the last couple cycles here, so it is showing oversold conditions with the same time factor. It's in alignment with this 9th as we're coming out of this. Now, I take all these indicator things with a grain of salt because I think it's easier to formulate a plan on a smaller time frame because uh, there's just easier weights. There's a lot more of a story on here. You also have less chances on a higher time frame. So let's zoom out. Right. The momentum, right? We have a zero line reject here on the CCI and the monthly, so that's good. This candlestick is an inside candle. The month's not over yet, whatever, but it's still above where it with the buying tail, and we have, right, some intra-month momentum, but still, right, lagging as well, right? I guess when this crosses, this will be the mother of all crosses. You can see here. Like, so how would I use this, right? If I'm an investor and I have a very long-term mindset, because I know some investors, and I have that side of me too, they can just basically never sell. They just hold on for dear life forever. And you really don't need to do that. So, like, let's say you were here and you didn't just have enough principle-based blah, blah, blah to say, hey, I don't care about any indicator, right? This right here is a profit zone. You have to take profits here. I don't care if it breaks out. This is a zone you have to take profits on, right? Let's just say you couldn't deal with it, right? So you're still in it this month. But now, right, you come up here we had blue over orange. We had this huge trend up, right? And then when we had the sideways a little down action here, it actually crossed very well. You can see how well this works. Then blue goes over here. Now, if you're still in it here and you see a double top and you see now orange go over blue, then just, you know what? Then you just deserve the pain that you're gonna get, you know, and you got more pain, right? And significant pain, right? I mean, because if you took profits, then reloading at the is easier here because you have more psychological strength, right? Then now you're back. Now you have nothing in ammo here. And who's to say this doesn't break down lower? I don't know what's going to happen. You also have to. That's another principle, and all these principles that we talk about. There's also a principle of anything can happen, and that's just the nature of market realities, or that's the reality of the nature of the market, rather. Speaking counterintuitively. Any questions? Great. Anybody have anyone want to talk about a trade that they took where they think, hey, is this valid based on the processes that we talk about? Or did I just, because there might be a trade that actually was a winner that maybe was not process oriented that will actually be incorrect process that will make you lose money over time. Like let's say you bought in the middle of a sideways range and then it broke out. Anyway, even though all the pre-market factors that I talk about were not there to increase the probability of a trend day anyway. So how much is that idea going to work out? How many times? Not enough to make you money over a long term. Oh, I think I got a question in the chat. Nope, psych. I was just psyching myself out. None. Um, where's my co-host Kobe? If he's got a few market comments or anything he would like to add.
It was so nice and sharp that I felt like I don't want to dilute by just adding blah blah because we don't have to do any kind of winning of time. If there is no questions, then maybe it shows that we're doing also good work
Well, thank you.
throughout the week and not only in these calls because these calls are literally here mostly not to recap but to provide an opportunity for those who spent the extra time coming here to face us with questions, face us with the problems they have with trading, may they be psychological in nature or otherwise. And I am glad that this group seems to be very efficient in their market play because otherwise there'd be more questions. And I see this as a positive notion that our descriptions throughout every day, we're doing this 24/7 after all, seem to be easy to follow and hopefully beneficial to your uh, trading careers. You can also criticize, you can also make requests of what you feel is less remarked on or what would be for your personal benefits in the different aspects that are playing into trading we should pay more attention to. But other than that, I'll take the selfish vote of interpreting the silence as nothing less than Matthew trading very well.
Well, thank you very much. Thank you very much. And I just want to add that I like what Corby said, and he said, "Hey, if you guys want to add anything, like how can we help you?" Is what I'm thinking. I'm thinking, well, if I was on a call and I know this one's taped, I probably wouldn't really want to maybe voice my questions or whatever. So, just in alignment with that blue screen break that I wanted to do, I might do, and this might be not be tomorrow because the market is what it is, but also it just might be too soon for everybody. Like maybe next Friday, I could say, "Hey, I'm taking a blue screen break, but we can talk on WhatsApp or text me DM and we'll talk on the phone or whatever. If you're international, we can talk on WhatsApp over the phone. And then, we can get into the nitty gritty of what the goals are and, how we can accomplish them quicker." just as a thought, let's throw it out there, kind of like those one-on-ones that I was doing, but the one-on-ones always ended up in us talking about charts and being on the computer anyway. So it's like, well, we're doing that every day in the channel, and we talked a lot of market context today, but how's everyone's portfolio doing? Did they take profits in April? Why didn't they? If they didn't, is it but they got too excited again and just thought that this thing was just going to break out, so who cares? Are they seeing like a past pattern where in a bull run, uh, they did eventually hold through when the big, huge leg happened, but you know, are making mistakes now by just thinking about that one scenario when there's all these other probabilities that, hey, you should have took profits at the double top. Hey, you shouldn't establish a larger core position when Bitcoin was making a double top. Like, I don't care what the price level is. Uh, these kinds of things are maybe obvious now because we're all calm and we saw what happened. But when you're in that state and your stress hormones are high and the cortisol's there and you're thinking in a more survival state, you're not going to make that correct process decision. This is 100% fact. What you can do is actually just say, I'm going to step away now. That's one thing to do. So you can talk about certain ways you can anchor when you know you got to step away.
To add to that comment, I of course make myself available too. We really care for our members here at PPT. I have to say so that from my personal experience, having been an educator for 25 years or longer, that it is of absolute value to drop one's pants, meaning one of the biggest values and most likely the most core motivating element besides giving something back, why Matthew and I running PPT for almost 2 years now, and we have a membership clientele that provides literally less money than it actually costs us to run this business, is that when you do this in front of other people, you're adding tremendous value to your own training because it is so hard to do. So we're not necessarily saying that you have to share your live trades and take the abuse of sharing a losing trade in real time, because that's a really tough one, that you're already losing money and then like everybody watches you doing it. But being exposed, taking full responsibility, sharing the hardships and doing this in a live environment, whether it's being here at these calls or in the Blue Room throughout the rest of the week, truly does have value. You make it impossible through verbalizing it to actually really see what you're doing, because what's going on in our minds and in our convoluted situations of emotions is often very, very different than what reality is. But you come a lot closer to reality once you share and overcome that emotional state through an analytical one. And you'd be surprised of how immediately people would be chiming in and said, yeah, I do the same thing. I do the same thing of, let's say, sabotage mechanisms of all sorts. This is just perceived to be individualized, and obviously it is a very individual process since we're all self-directed traders. But the problems and the obstacles are actually very common ground, and to most people, not at all an individual, unique situation, but rather just another problem that has a solution. And that habit of sharing the problems and the habit of accepting the solutions and that friction is, if not the most important step to actually introduce change, because as we all have experienced and know, you have made 100 promises of never running that stop again, and you then still you run it another 100 times. So this doesn't really work that easy. So that the added pressure and the added exposure is of high value. Is actually at that level, as I assume all that are right now attending the call be in. There's little to gain from a book. There's little to gain from another video course, another YouTube video, because that classical aspect of trading has just been exhausted in this regurgitation. If anything, in an environment like that group that you find yourselves, there's a demystification of making clear of what all is not working, even though it's supposedly common ground and should be working. So it's my own spiel to encourage still, do ask these questions, do show up, which with everybody here is a fantabulous result. You're here every week, and this is part of my little spiel of where I wrote that comment today spontaneously in the Blue Room of extending to all those who bring a new client a lifetime grandfathering in of the price levels that you pay right now, which rest assured are extremely minimal to what PPTs expect to be going to in the future. And I appreciate the consideration because this deserves reward regardless of me asking something in return in this aspect. Um, I I salute you for sticking to this with such deliverance, because it has not been easy, especially over these last 2 years, to be a participant in trading world. My daily and intraday on the 60-minute and the 4-hour time frame research that I did not too long ago show that we had what I define as a swinging market, the most easy to be trading market, only of 13%, which is extremely low. This was reflected in the second to last um, little article that I wrote, where I posted these 4 charts on black screen with linear regression channel models, where we can see that especially that phase of depending on the different vehicles since March of this year is a very unusual market type that we see very rarely. And for that, we have to say performance of both channels has been unexpectedly high. So whatever we're doing something right. That is praised on PPT being principle based. So you don't even have to believe us as teachers. This is um, based on ultimate truths. This, as that, I see a bright future for both PPT teachers and PPT students, and I'm looking forward to us all making a ton of money together.
Amen. All right, guys, you know where to find us. Red and blue. Take care.
Thank you. Bye.
Bye, guys.
Thank you.